Today we are going to discuss about the depreciation. The question is that what is depreciation? In accounting, depreciation mean when the value of non-current assets reduce at the end of accounting या financial year. जब accounting year के end पे or at the end of financial year when the value of non-current asset reduce, that is called depreciation. Non-current assets are non-current asset that mean that assets which lifetime or more than 1 year. यानी ऐसे एसेट जिनका जो लाइफ टाइम है या जिनका जो बेनिफिट है वो 1 साल से ज़्यादा अरसा के लिए रहता है. दीज आर कॉल्ड नॉन करंट एसेट्स. Assets with lifetime or more than 1 year, with benefits or more than 1 year, are called non-current asset. The examples of non-current assets are tangible assets. For example, furniture, fixtures, equipment, machinery, vehicle. This type of assets are non-current asset. And when the value of these assets reduce at the end of the year due to usage, due to wear and tear, these are called, or this is called depreciation. And depreciation is your expense. Depreciation is your expense, and when expenses increases you will record in debit side. So the question is that how we can calculate depreciation. We can calculate depreciation by using two methods. Now I am going to discuss these two methods of depreciation. First of all, let's see, students, methods of depreciation. How we can calculate depreciation. Number one, straight line balance method. Straight line balance method. It is also called cost method. The fixed price method. Straight line method or cost method or fixed price method. In this method, the value of depreciation is fixed in every year. Second is reducing or declining balance method. In reducing or declining balance method, we calculate depreciation on reducing balance of every year. Now let's see, students. You can take the example. If I purchase furniture for rupees 10,000 and I charge the depreciation at the rate of 10%, in first year the 10% of 10,000 is 1,000. That is fixed depreciation. Assume that the lifetime of asset in the furniture is 5 year. In first year it is 1,000, second year it is 1,000, and third year 1,000, fourth year 1,000, and fifth year 1,000. In every year depreciation will remain fixed. That is 10% of cost, and it is also 10% of cost. Fixed method on cost and on cost and on cost. If we calculate depreciation under straight line balance method, and every year you will calculate, in first year you calculate 10% of cost, second, third, fourth, and fifth. In 5 years you calculate 10% of cost price. That is 1,000 is your depreciation. These are 1 2 3 4 5. This is 5,000. This is the total of 5-year depreciation. Let's see, if we reduce in first year 10,000 of furniture, reduce 1,000, the remaining will be the value 9,000 at the end of first year. If in second year 10,000 is the cost and the depreciation of 2 years 2,000, 1,000 plus 1,000, The remaining value at the end of second year is 8,000. Same like this, 10,000 is the cost price, and the depreciation of 3 years are 3,000. 1,000 plus 1,000 plus 1,000. The remaining furniture is 7,000 at the end of third year. Same, 10,000 minus 4,000, the depreciation of 4 years. At the end of the fourth year, the furniture value will be 6,000. And lastly, 10,000 and 5 year, 5,000 is the depreciation of 5 year. At the end of 5 year, the net book value of furniture will be 5,000. That is the remaining value. Now let's see, if we prepare income statement, in first year 1,000 will be the expense, and second year 1,000 will be the expense, and third year 1,000, fourth year and fifth year 1,000 will be the expense. And every year you will charge expense 1,000. And first year 1,000, second year 1,000, third year 1,000, fourth year 1,000, fifth year 1,000, sixth year 1,000. Every year you will charge 1,000 depreciation in income statement. And if we talk about statement of financial position, what will be the effect? In first year 10,000 the value of furniture and minus 1,000 first year depreciation, you will write 9,000 in statement of financial position. And second year 10,000 minus 2 year depreciation, the remaining you will write 8,000 in statement of financial year. And as following, 10,000 minus 3,000, 10,000 minus 4,000 and 10,000 minus 5,000. At the end of fifth year, your fifth year of statement of financial position, you will record 5,000 the value of the depreciation. Simply you take percentage of the cost if you are using straight line balance method. This is all about the straight line balance method. Secondly, sometimes the percentage is not given and examiner asks you to calculate depreciation under straight line balance method, then you will use the formula that is cost minus scrap value divided by lifetime, estimated lifetime. The cost value, for example 10,000, the cost value of furniture at the end of his lifetime, it will be sold out in scrap 5,000 divided by lifetime is 5 year. 10 minus 5 is 5,000 divided by 551, and this is 1,000 is the depreciation of 1 year. You will charge this depreciation first year, second year, third year, fourth year and fifth year. This is fixed depreciation. You can use this formula if the rate of depreciation is not given in the question and examiner asks you to calculate depreciation under straight line method. It is also called cost method. What type of things examiner asks you and depreciation? Now let's see, student. Sometime examiner asks you, number one, to prepare asset account. If examiner asks you asset account, simply you will drop T account. And T account, for example, this is furniture account. Furniture is 10,000. You will record in debit side. In first year same, second year, third year, fourth year and fifth year, this will be the same in dollars. And examiner asks you to calculate depreciation is an expense. This will be the debit of depreciation in every year. First year, second year, third year and fourth year, and every year you will charge same account. You will record same account. And sometimes examiner asks you furniture depreciation and one more, that is provision for depreciation account. If examiner asks you to draw provision for depreciation account, student, then here provision for depreciation account. Simply what you need to do, you will forward premium in next year. First year you will calculate premium 1000 and then you will close the account. This is higher side 1000 and 1000, the balance carried on will be the 1000. The second year you will bring this balance in the opening balance BD 1000, and you will charge depreciation for the second year, that is also 1000, and then you will close the account 2000, 2000, and simply balance carried on is 2000. Then what you need to do, then balance BD in third year, this balance carried on you will move to the third year, that is 2000, and you will charge provision for third year, that is the total of 3000, and 3000 balance carried on will be the 3000. Same like 3000 you will record here, and you will charge provision for the next year 4000, 4000, and balance carried on will be the 4000, and same like third year. This is the method of how to record provision. Provision will be forward from this, it will be forward to next and charged second year and add, and then balance carried on 2000. Bring the balance carried on in next year and charge depreciation for the third year and accumulate it, and 3000 balance carried on is 3000. You will BD next year and you will charge next year's provision, and total will be the balance carried on 4000, and same like 4000 will be BD and 1000 you will charge next year, and 5000 will be the BD. This is the provision for depreciation. Next, sometime examiner asks you effect of depreciation. Depreciation is an expense and you charge expense in income statement. In income statement, in first year, in second year, in third year, in fourth year, and in fifth year, you will charge 1000, 1000, 1000, 1000, 1000. This 1000 is an expense in income statement of the first year. This is an expense in income statement of second year. This is an expense in income statement of third year and fourth year, and same like fifth year. And where you need to record this expense, you will record after GP. And GP you will minus expenses, add expenses. From this add you will charge depreciation, non-current expense. In every year you will record only 1000 expense. This is the effect in income statement. And sometimes examiner asks you to mention the effect of depreciation in statement of financial position. Statement of financial position. Statement of financial position also called balance sheet. In first year, for example, the asset is 10,000, first year 1000, the remaining will be the 9,000. This is the effect in first year. 10,000 minus 2,000, the remaining will be the 8,000. This is the effect in second year. 10,000 minus 3,000, the remaining will be 7,000. This is the effect in third year. 10,000 minus 3,000, the remaining will be the 4,000. This is the effect in fourth year. And lastly, 10,000 minus 5,000, the remaining will be the 5,000. This is the effect in first year. This is the effect in second year. This is the effect in third year. This is the effect in fourth year, and this is the effect in fifth year. And statement of financial position. The position of the asset will be changed due to depreciation. This is all about depreciation, how you will drop asset account, how you will drop provision for provision account, how you will drop depreciation account, how you will affect an income statement of financial position under straight line balance method or cost method. In next video we will discuss reducing balance method of depreciation. Thank you very much.